Hello everybody, and welcome to this video. To preface this video, I want to start by saying to you guys, I did not take this trade I'm about to break down for you. However, the reason I am recapping this trade is because one of my mentors took this. His name is Angus, and this is going to be in the style of Powell trades, if you know who that is. Angus also trades similar to Powell. So I personally trade PP trading model at the time of this video, but I'm learning the Powell model as well as, similar to Angus. And so right now I do not know enough, and I'm not confident and comfortable enough to execute trades on this model, but I'm trying to keep up with it, learn it, and backtest these trades, mark them out, understand the recaps, and explain it to you guys so that I have a better understanding, so that moving forward I can kind of switch over my trading style to this way, because PP trading is very good, but I am not a fan of the risk to reward and the somewhat lack of understanding of the market. Obviously, they understand the market, but like they're not entering at 2:30 p.m., right? I want to be able to enter anytime, any day, any asset kind of thing, right? I just feel like some of those ICT guys don't even really know what's going on with the market, so they're just like pattern trading. But I just want to preface that because people in my previous video have said, oh my god, another replay trader, things like that, okay? I did not take this trade. Okay? But let's go ahead and recap this trade so you could have taken it. You can understand what went into this trade and understand why my mentor took this trade. And if you're interested in joining the Discord, drop a comment down below and I will get you guys. It's a free Discord. He helps out. He's mentoring, gives you free education, all those sorts of things right now for free. So, and this is similar to Powell. Okay, I have all Powell's course as well, so that I've been going through that. But anyway, let's go ahead and jump into it. So we pretty much every single day you're going to mark out previous day high and previous day low. So here I've marked it out, previous day high. Today is Tuesday, so this is obviously the high from Monday. Okay, now the previous day low is just getting way out of the frame, so it doesn't really matter. Now obviously I've also marked out this level up here, equal all-time highs, which is exactly what it says, equal all-time highs. Okay, obviously I have those marked out because we moved up here so close to all-time highs that it looked like that was our next draw. So going into the day, for me personally, as I was trading the PB model, I was bullish, but as you'll see today, it really didn't play out like that. But we're not talking about the PB model, so let's continue on here. So for Powell trade / Angus, one of the things that they are focused on is key levels and key opens. Now, some of the key opens are going to be midnight open, daily open, 10 a.m. open, 8:30 open, the 1 p.m. open, okay? Now, another thing for me is market opens for me at 8:30. So each time that I'm talking about here, I'm in Central Time, so I subtract an hour. So market for me, boom, 8:30. That's what this vertical line is here, okay? But let's go ahead and jump in and start marking out these key levels, key opens, right? So first thing we're going to do is mark out the daily open, okay? Daily open for me is at 5 p.m. here. So let me find where this was. Let's see. 5 p.m. Boom, 6, 5. Here we are. So looks like that is our daily open. So our daily open right there. Okay. Now, let's go ahead and mark out our weekly open. No, I already have the weekly open marked out, but it's all the way down there. So now let's go ahead and mark out the midnight open, okay? So midnight for me, again, since I'm Central Time, you always want to do midnight New York time. So that would be 12 o'clock New York time, which is 11 p.m. for me. So I'm going to mark out 11 p.m. Where are we at here? Let's see. 6, 7, 10, 11. Okay, here we are. Somewhere in here. Boom, 11. Okay, so it's this candle right there. So this here is going to be midnight open. Alright, so now we have our daily open and we have our midnight open marked out. Okay, so now we can go back here into like the 5, kind of get a good look at it. Okay, So market opened. Well, not market, sorry. The day opened right here, obviously, right? After the day opened, we got a nice move to the upside. We swept out this previous day high, closed below it, back tested it right here. That was an entry if you wanted to during Asia's session. Then we sell off, flushing back down through the daily open. Again, we closed below it, then back test the level right here. Could have shorted that as well. Now, neither of those are shorts I was interested in, but I'm just going over price action, right? So we open the day, boom, come up, take out previous day high, come down, go back below the daily open, and now we're selling off, taking out these equal lows. This triple stacked low right here. It's a nice draw on liquidity we had to take out. Comes down, fills in this fair value gap right here, right? Beautiful. Okay, then we just kind of chop around. That was London session. Came down to fill in this gap here. Then we're kind of just chopping, waiting for New York to open. Okay, New York opens and we drop down here, manipulating out all of London lows. It looks like it might be a New York continuation or potentially even a New York reversal, right? Because we came down, swept out London lows, so now we get a reaction to the upside to target these all-time highs, right? That's what I was thinking. So that's pretty much what happened. It was a super choppy delivery here, but that's essentially what happened. We come up, retest the midnight open and daily open, and we sell off from there. So there was an entry here as well, kind of, if you took this golden pocket from here to the lows. Damn, where the hell did that even just go? What just happened? Put on our retrace here. Boom. Okay, or not. Wait, where is our... There we go. I was gonna say, bro. So here, as you can see, price, after we had that nice sell-off, price chopped around, sold off down, and then we move up. We come straight up to the 786 level, okay, and then we sell off from there. So that could have been an entry, but you probably would have been stopped out with your stops just above the 786. So kind of difficult to take a trade there. So would have probably been sitting on your hands. You could have shorted daily open, depending on where your stop loss is. Would have been pretty tricky. But let's say you took your stop loss got hit. Holy shit! Let's say you took a loss, right? No worries, because after price had tapped into this, if we go up into our higher time frames and we look at something like the 4 hour, we can see. Zoom in here, kind of zoomed out a little too far. You can see we had this nice fair value gap in here. So we came up into this fair value gap, and not only did we fill that first and reverse off of it, but then we also came up into this order block here. Hit pretty much the very top of the body as well, matching this body here. Also, if you kind of want to look at, you know, this candle here, we topped up here into this rejection block as well. So that's not the only thing though. The most important thing is if you take a look at this huge long 4 hour wick here that rejected from this order block, and if you take that and you take the CE of that wick and find that right there. So I just drew the gone box and get this blue 0.5. It's hard to see, but it's in here. I'll try to make it a pink or something for you. Here we go. That pink line right there, that's going to be consequent encroachment of the 4 hour wick, which is a rejection block. Okay, so right now we have the daily open, the midnight open, and we have a rejection block, which is CE of the wick, the 4 hour wick. Okay, now if we go back into like the 5 or the 1 or whatever, and we're looking here, and now price, right, we came up, we got this sell off from the 786 level, and price sold off down, didn't even sweep out this liquidity or anything here. But we got put this low in here, and now we're retracing back up into this fair value gap, back up into the daily open. This is where the trade is made. Okay, so if you take from this high to this low, a new golden pocket, we completely ignore this level here. We're chopping in it, so you probably may have got entered in here, but no need to. But if you were in the chop, you know, no big deal. Okay, I just went ahead and removed that 4 hour gap because we don't really need it on the chart. Just know we came up and filled this 4 hour gap, so it's another reason to be bearish. But Anyway, so we can go ahead and take off the 6.6 and the 6.18 level because price was just chopping in there. We didn't get a good reaction off it, right? And the key thing here is to see all of these confluences up here that have aligned, okay? So now we have the 786 level, we have the daily open, we have the midnight open, and we have the 4-hour rejection block right there, okay? Now, there's one more confluence, okay? Which most of you guys probably don't know about this, but my mentor Angus has been using this for quite some time. So after you get a nice sell-off and then a move higher, so like kind of like have a nice impulse move and then something like this, and you start ranging, you can take a fib from this high to this low, okay? So that's exactly what I do here, right? So we have this, we have this sell-off, and then we make this high and put in a low, right? So I take it from this high and this low. All right, so I'm going to draw that fib on now, right here to this, boom. Now this is the Fibonacci tool here, divergence, and you can see the levels right here. Copy them if you want. But now, as you can see, I'm only going to turn on the levels that matter because the only ones you're going to focus on are these red and green ones. But, you know, obviously we don't need this bottom side down here, so we can take those off. And you can see that red and green line right here, that pocket is perfect. That TR pocket is beautifully aligned inside of these. So we have great levels now. We have daily open, midnight open, a 4-hour rejection block, a 786 level, and a TR pocket. So we are completely stacked up for a beautiful looking short right here, entering on the daily open. With your stop loss, I would have probably almost put it right here above this, but that's only a 4.5 point stop. So I probably would want like a 10-point stop here, right there. Then literally your first TP, hold up. First TP would have been this low right here. Second TP would have been here. Third TP all the way down here if you could. We obviously haven't hit that yet, but now you can see price for the first TP would have been a 1 to 2.6. Very good. To the second one would have been a 1 to 7 RR, and finally a 1 to 12 for the final take profit. So that is all you would have had to do. Now the entry, you literally could set a limit order at the daily open, or if you really wanted to, I believe there might have been, let me see if you could have got a, no you couldn't have, but yeah, so you would have had to set a limit at the daily open. The 5-minute rejection block did not get tapped. So yeah, that's the trade. That's how you guys could have caught that. These are kind of the moves I want to start taking moving forward. And the reason I like it is because you can take that at any time, right? If that would have hit during Asia session, you easily would have taken that. If that would have hit during London, you take it. And it's so clear to see because everything is already lined up. I mean, the TR pocket, boom. The 786 level, boom. It's like it's all already there in front of you. So you're just marking things out and they're just aligning, you know? Obviously, you need some sort of narrative. You need some sort of context, but the realness of it is you're just lining up confluence and seeing, okay, this level is going to smack. So you just, boom, limit order, take your take profit at the initial low or however you want. I mean, at this point, you could trade supply and demand with the strategy and you'd be good, right? Because this risk to reward is insane. You got a 10-point stop. It's just so good. That's why I like Powell Strat and just learning to trade this model. So I hope you guys enjoyed this video. Again, I did not execute this trade, just me recapping it for you guys, a trade that my mentor did take. Here, let me actually pull up his executions for you to see. Well, here is where you can see his first screenshot when he was in profit still. He only had 5 cons left. Took that exact, right here is that choppiness right above the daily open. You can see stop loss is right up here, previous day highs up there. Super simple. Then here is the full screenshot of the exits. He had to close because obviously market was about to close, so he just went ahead and took profit at the that low. So gorgeous trade right here. You can see it's not just hindsight. Obviously for me it is. I've said that 20 times in this video, but my mentor was able to take this and execute on it. And the thing about this is you can have a lower win rate because your risk to reward is so good. So you can have a low win rate and a high risk to reward and still be profitable, which is what I do like about it. Plus, you're able to catch big moves and reversals, and you can kind of just throw this stuff on your chart and see exactly what will work. Here's the mentor right here. If you guys want to join up, you guys can join the server. Right here is a link. Boom, join up, get in 7 days. I can invite you guys, so let me know down below. But anyway, that's all I have for this video. I hope you guys enjoyed it. I will catch you guys next time. Peace.